trend from that point. From 1 o'clock onwards, you start looking at it saying, right, where's the 1 o'clock trend coming from? Remember, 1 o'clock is when the US market starts. It's an RGL, it's a level, it's a price that you can trade from. Well, good, because if you traded the RGL at 1 o'clock, you would have been able to get the short trade on the trade to the downside. 14,257s, traded a low of 14,140s for 110 points. $2,200 of profit if you took the deal, guys. $2,200 on that short trade since 1 o'clock. It's an RGL. It's the pre-market open. It's where all the business comes from. That's why we use 1 o'clock for bonds. That's why we use 1 o'clock for the equity markets. It's the next RGL. So you can see that that was a brilliant bit of business, great sell-off, and well, you made a lot of money. Hopefully you made a lot of money. So this is where we start the trend line from. When you start developing out your trend line from that, you start looking at it from this perspective, and all you're going to now do is you're going to adjust it according to where the next highest price is, and you start developing out your trend between now and 2:30. That's the trend line that anybody is going to be watching that's coming into the US session, is the pre-market trend. What is the pre-market trend? Where is it coming from? And how can I take advantage of it? So you saw what happened from yesterday's pre-market trend. We talked about it in classroom. So this is what happened, isn't it? So here's the pre-market trend. You can see the high price at 1:30 there. It comes from the 1 o'clock cash market highs up here. If you want to take it all the way back to that point and run through the trend lines, you can see the trend was very, very obvious, very, very crystal clear. The selling coming away from the trend, the selling coming away from the trend, and it stayed short the whole day right off that trend line. Does that not impress anybody? Does that not look like something that you want to know about? Well, sometimes yes, because a break of this and a hold above it really does signal the potential to change the direction of the markets. It's the trend. That's all it is. It's not a line per se. It's just simply that that's where the pressure is coming from. So the sell trend that comes from that 1 o'clock, 1:30 area. Now, the reason why we sometimes start at 1:30 is, of course, because at 1:30, sometimes we get a data release that completely changes everything. So we end up usually starting at 1:30 if there's big US data at 1:30. So sometimes it'll be 1 o'clock, sometimes it'll be 1:30. Whatever it is, you've got the opportunity. On this occasion, of course, both trend lines are almost identical. And it's a simple case of just readjusting the trend line marginally, just to remind yourself what the trend is.